The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, Tiger Technicians Hour on this Wednesday the 2nd of April, Tariff Day. What is going to be said? Well, this is going to be interesting because the market at this particular point looks like it is like a rubber band. It is so negative in the sense that the selling has just been persistent. Every rally has been sold off. If there's even just a ray of sunshine, we could have a pretty decent bounce. Is it a bounce or is it a turnaround? That's almost impossible to say. Is it disappointing? And then all of a sudden we back down very sharply. All of those questions will be answered tomorrow by this time, tomorrow at 10 o'clock, I think, in terms of what the market was expecting and what the market got. I'll be doing my show early at 8 o'clock, so I won't be here for that hour because it's going to be a really important hour. Not the point. The point is that if you're looking at this market and saying, forget about tariffs. I was asked the question yesterday, if tariffs weren't on the table, and the entire unknown of tariffs, it's not like a tariff, it's tariffs all over the show. And what the implications are in all the different sectors, would I be this bearish? And the answer was no. I would have thought that the 40,661 level, first of all, I don't think it would have been hit. I think we would have stopped somewhere in the 42,000s. And then by now we should be maybe at the 43, 44,000, still within the context of a kind of overall bearish tone, because there was a lot of oversold. The semiconductors, the tech sector. I mean, look at it. Microsoft goes from all the way in the 440s down to the 380s. I mean, a lot of these things needed to take a big breather. They're at a point here where technically they should start at least a concerted multi-week rally. Okay, with that said, tariffs are the issue. There's no question about it. So just to give you an overall picture before I go through all the numbers, for subscribers to my opening call, we took off the long positions a little while ago from the Dow. We did have one or two experiments, just a testing, which didn't work, but we've remained with the short positions. Today we added a long, the 3 times long Dow. There were a number of reasons. I don't want to waste time going into it, other than to say that it was almost like an upside insurance policy. We've got the downside insurance policy. I need an upside one to just give me a sense of whether or not there was a relief rally that would be more than just a momentary dip or a momentary rally, and then fail. So I need to just clarify. Look, here's the Chapman Inside Track Propellant Zone. We held 3 days ago. Yesterday was not a bad day. Today's, look, it's still the 9-period moving average is pink. It deflected low in a potential W formation. We've made an internal low. I'm waiting to see whether or not I get information to say that this could be a residual low if it takes out this trend line. Just make it as simple as possible. If the Dow closes by Friday at 4 o'clock, or maybe Monday, under 41,000, that's a problem. All right, just make it as simple as possible. Let's get out of this and run our numbers. So the Dow right now is giving back some of the gains that it made, very strong gains, but giving it back is only down. It's down 116 at 41,873. It will break out at 42,320. Break out from the resistance area, but to get the pink 9-period moving average green again, that's going to take a little bit more. All right, that's the Dow. Let's go to the S&P, SPX.X. I think all the excitement from the very opening bell is now that's over. Now we've got another day coming up. This is the real day coming up. No more speculation, anticipation. Now I think there's a wait and see attitude. Down 24 in the S&P at 56.08. 9-period moving average very negative. Stochastic is down at 42%. That's poor. On-balance volume is not bad. But look, the MACD is actually holding well, but the relative strength, the gray line there, is really struggling. It's kind of negative. Weekly chart, look at this inside track. It's gone back into the inside track support level. All I can say is that if the S&P by Friday afternoon at 4 o'clock is below 5,500, let's make it 54.87. If it's below 54.87, that's a real problem. We've lost the opportunity to have a decent rally. Okay, go to the QQQ, NDX 100 down 2.48 at 470.18. All negative. Pink 9-period moving average. MACD is just barely positive. Relative strength is weak. The on-balance volume is terrible. There's just no volume that I can see to sustain a rally at this particular point. And the stochastic at 32%. The daily is not good, and we're under the key support level. We're right on it right now, but we've been under it in the weekly chart, and all the technicals there are very bearish, and the monthly chart is still pretty bullish in terms of the 9-period moving average being way over the 40. IWM, Russell 2000 at this particular point is up off the low, but it's still down 35 cents at 199.19. I haven't spoken about the dreaded H pattern. I don't want to take time. We spent yesterday talking about it. All the indices except the Dow went underneath the left side low of the 13th. The Dow has held up much, much better. In this case, the IWM is down 18 cents, trying to form some kind of a base at the 200-period exponential moving average, but it did take out the 197 round number low. A pretty decent bounce up to the 210 level, 209, and now, oops, wrong thing. That's a leg D to the downside. This is what I wanted to do. Okay, so we're watching the IWM. SMH did I do that? SMH is down $1.11 at 211.38. Took out the left side low. It's been struggling under that left side low from the 13th, and the technicals are all very weak. Now I need to go to something very important. I want to go to just in terms of the leadership as being gold. Gold right now is up 13 at 31.59. None of the technicals that I'm looking at are suggesting that there could be a very sharp pullback. There could be a pullback from 31.60 into the 31, is that 07? Yeah, 31.07 9-period moving average support, and then 30.83. 3,083 is the 14-period moving average support. But I suspect that if that happens, we'll be looking at many things that give us clues to say the fear factor that is, for me, the most important thing that is inherent in gold rallying, especially when gold rallies without really the follow through. If the general rallies and the soldiers are kind of sporadically following, and it says, hey, what's going on here? In this case, what's going on here, this is for Jay Jacobs' favorite expression, what's going on here? What's going on here is this is the go-to place when there's geopolitical economic fear in the world. Okay, and that's exactly what's happening. It might be alleviated today. At 4 o'clock, we're going into tomorrow, we'll be seeing that. Silver, now this is very interesting because silver did have a rally earlier on, but it's really much weaker than gold. It's up to 26 cents at 34.57, but it's kind of stalling. I'll be back in a moment. Dow's down 118, S&P down 21. Basil Chapman, Tiger Technicians Hour. See you in a few minutes after the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Folks, we're back, and a couple of things I wanted to talk about. One is, I don't see this written up very much or heard much about it. What if the tariff threat becomes less a threat, but an ongoing process of equivocation? In other words, there's a negotiation that's been going on between each country, between different sectors of whatever they're talking about, and that there's actually a statement that's made, and the statement is a little bit benign. It's way less than the all the economists. I mean, from the magazine The Economist to Wall Street Journal, everywhere you read, they're talking about. Oh my God, if this and that. I'm just saying that there's a potential right here that if, and it's a really big if, but you have to put it into the equation of what you're looking at, because this is a complex moment in the market, and we've been in a bear phase, at least multi-weeks on the downside. The major instruments, the monthly charts are still looking pretty darn good. What if? So I'm just saying, what if? Well, that would suggest that tomorrow there is kind of an explosive move to the upside happening overnight going into tomorrow. And by the time you want to buy anything, the Dow is up 500, the S&P is up 60. And then what do? You're going to buy, and then all of a sudden, whoops, it wasn't quite as you read it, and the market pulls back. This is going to be the challenge, not the challenge on the downside. Many of us have already been preparing for the downside and have positions, have built up cash, wanting to put it to work. I'm just saying that you've got to look at that as a potential. It doesn't mean to say it's going to happen, but if you're not looking at the market both the positive and the negative side, you're missing a balance. You're missing something that could happen that you aren't prepared for. I'd rather be prepared for that. So this is what I'm saying, that if the market actually rallies overnight, and let's just say it isn't some kind of a sudden slip giving you an opportunity to buy, it's the exact opposite. It is this gap up, and you have no idea whether that's going to continue for days and days into next week, and you keep saying, I wanted to buy. So the idea is maybe do a little nibbling here on something that you really like. Just kind of get your foot in the door at least. You know that you can get stopped out, and you've got a small position so you can take a small loss. But if you're in, it just gives you a sense of, whew, at least I am working in sync with what the market's doing. I don't have to get into a panic and say, oh, now what do I do? Because I was preparing for it. And that's all I'm saying, is that's kind of what we did today. Just kind of foot in the door to say, hey, we've got just even a glimpse of sunlight, and this market will say, okay, let's do a little rally. It doesn't have to do that. I'm saying I'm preparing for that scenario. It's really important that you prepare for scenarios and that you're not having to suddenly develop a plan for something else. Okay, I have the plan. I know exactly where I would want to go if there is a market rally. Some of the positions we actually have, I would like to add to them because we got in so nicely at the bottoms. That's just the scenario, right? So with that scenario, let's go on. So we're looking at gold. I said gold was doing still very well. It was up $11. Now it's up 16. So far, this is the go-to place, right? The GDX is the kind of a clue here. The GDX, the gold miners, hasn't broken out. It's just stuck at 46.59. Hasn't gone to the 46.89. I think that's what it was at the high. 46.94. Let me just type that in. 46.89 was the. No, it was 94. Was it 94? I think it was 94. 94 was in fact the high. Good. Nice to know. And with that said, nothing wrong with it. Look, the 9's over the 14. The MACD is turning down. It's just about across negative. It hasn't yet. The relative strength, here's the line, the relative strength in the GDX, the gold miners ETF, is flattening out, not negative. It's just kind of, it's not showing tremendous strength. It's not flat. It's not doing much. Stochastics at 80% starting to turn down. On balance, starting to turn down. Nothing serious. And the weekly charts are still fabulous. All right. So as it stands right now, that's the GDX. Look at the silver chart. The silver is trading up 28 cents at 34.59. Went to a peak. Remember, Chapman wave methodology, D's where other things can happen. Well, it went to a D just on 35.50, and it's pulling back a little bit, but holding very nicely. Some of the technicals are starting to fail, but the 9 is still over the 14. So I would say 34 is, if it closes under 34, that's starting to turn down in the daily chart. Wait a minute. Let's go to high-grade copper. High-grade copper is up 0.01, really doing nothing at 5.04, but the 9's over the 14, but the MACD, stochastic are weak. Relative strength is weak, but the on-balance volume is holding, and the 9 is over the 14, so there is still buying coming in there. Now let's go to something else. I just want to go to GE to see where GE is. So GE is down today, 222 and 201.56. Made that peak D just under in the 213s, 214.21 was the last high. 212.17 was the previous high back in February, and now it's pulling back. If I do GE, then I like to do something like a what do I usually do? GE, and let's just do NVIDIA right now. NVIDIA is up. No, it's down 1 at 109.11. Doesn't look like a great chart. There's the dreaded H, but the here's your trend line support. So let's see if we can hold that. If it holds the trend line support over the next few days, that goes down to 99.60. Let's call it 99. It's trading at 109 right now. So that's still holding pretty darn well. I want to go back to the So someone asked me if I could look at platinum. Yep, platinum is just stuck. It's in this trading range, not going anywhere, down 12 at 992. And then I was asked about PALL. I think that's palladium. Yeah, palladium is just going sideways, made a peak D at the 200-period moving average. It's holding well. It's showing some kind of strength in the daily, but not so much in the weekly chart. Then the question came in, could I look at, where was it? Oh, FXI. FXI is the China large caps. The large cap is trading down again, down 24 cents at 35.52, having made a 38.73, 2 times high for 2 days into the 19th of March, and now it's down to the 35.50, not a big deal. Then XPEV, I usually do that. I'll do that. And BABA, XPEV, had a little bit of a bounce, but now it's trading down 3 cents at 20.93. Went from 27.16 down to the 19s and now 18s, and now it's trading at 20. It's just kind of stalled, taking a bit of a breather. BABA is Alibaba. Alibaba is trading down 2.30 after making that peak G in the 148 area. Yeah, it's just kind of stalling. So this is going to be very important. How do we come out of this tomorrow at 4 o'clock in the afternoon and 24 hours later? I'll be back in a moment. Dow is down now only 23 points. Very nice. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So the Dow just went positive, up 14. S&P's only down 3. This is kind of the scenario that I wanted, that if we could get in early on this morning when everything was very negative. Now we've got a cushion. At least you got a cushion. That's what you need. All right. So the E-mini is just going to leg E in the 1-minute chart. Leg C, I think it's still going to go to leg D in the 5-minute. And I'm wondering if this is not one of those 2-click sessions in the 10-minute chart, because it's just been straight up and it's only in leg B. We'll see. The day is young. So a question came in about CX. Well, 2 questions. One was the GVZ. GVC is the, where was it? Now, that was very important, because I used to look at these, but then I found them not as helpful as I thought they would be. GVC is the CBOE Gold Volatility Index. Now, I don't get it on here. I've tried the different ways, and I can't get it. Sorry, Sharky, but it's a pity. It would be interesting to see. Now this is going to be interesting, because I had a question in the Tiger YouTube about CX. This is an old favorite of ours, CMEX SA. There's a Mexican cement company up 1 at 5.71. Now I'm just going to suggest that it's been hammered from the downside from the 680s down to the 540s. If you're interested in this and you're looking at it as a long-term position, I have no qualms in saying to you, this is the type of thing that has the potential to be a decent, I wouldn't say long-term, but I would say if it succeeds as a short-term play, it then has the potential to be an intermediate-term play, meaning now we're talking weeks rather than 10, 15 days. So yes, at 675, I would still have a stop. That 640 low, 638 maybe. Maybe it's a little bit too much in percentage terms, but that's kind of what I'd be looking at. Start your position. This one I would increase on each move up, pulling back and starting a new leg. That new leg, you can start another little bit extra. So that's the story right now. Dow's at 40. So here's the question. What if you get in now and everything looks great, but all of a sudden at 4:30 this or 5 o'clock this afternoon, the market's tanking and you're in positions that you can't get out of? So I'm just going to suggest you try to do what we've done, which is go into anything that you have that is tradable overnight. It really is important. You want to say, you don't want to wake up in the morning with something that costs you $83, and because of whatever it is, it opens tomorrow at $73. I mean, that's just, have something that you're able, and if your platform doesn't allow you to trade overnight, I would say, if you miss a big move going into tomorrow at 11 or 12 o'clock in the afternoon, 12:30, and the market's really up huge, it means that the market is going to move for a little while. It is so oversold. It's going to have some pressure to the upside. You'll have time, so you don't get the best price, but at least you get the trend. So don't be afraid, and don't overdo it right now. We have no idea what the market really is doing. Look, the market's just anticipating, did that yesterday, and then we still went down in the end. Okay, a couple of questions. Let me get to them. Okay, well, let me see. First of all, we did that. Yeah, okay, got that. I'm just reading the Tiger YouTube. So this is something, Jeff, you mentioned NMAX. So I followed this, I didn't even know what it was until the other day, and it's just going nuts. It opens 3 days ago. The first price is like 14 or something, and then it rallies all the way to 80, and then gaps up yesterday, and it screams up to 250s. So let me just give you the numbers. This is NMAX, which is Newsmax. Newsmax makes a low, opens on the 31st, right? That's Monday. It always opens at round numbers. 14, that's the low. 14. Imagine buying it at 14 and you get it at, say, 16. 16, and that day it closes at 83.51 at the high of the day. And then you think, it's amazing. What am I going to do tomorrow if it suddenly pulls back? No, it gaps up. It gaps up. Starts off the day at 114, 125.98. The low is 114.22. And it screams up to 265 point zippy. Round number, leg A. Amazing. So this is leg A. Let me put that in. What did I say? 64? 260. 260. And I'm going to put for the moment round number high. Let me just double check because I was talking at the same time as I was typing. Therefore, I wasn't thinking. 260. 265. All right. So I've got that right. So it goes from 14 to 265 in 2 days. Well, today it's trading at 123.36, down 109. Imagine if yesterday you were buying it. No, I mean, that's not cheap in 100, 200, 260 area. And now it's down to 123.87. Got to be careful. All right. This is a market where I would not go out on a limb unless you were feeling much more comfortable with the way you're putting your positions on. Okay, question about Palantir. Palantir is trading right now up 95 cents at 85.64. So you remember my theory has been for years now, when you're in, you're in. It's just like either politics or in the media. If you're in, you can do anything you want because you're in. The media will not bother you in the least if you're in. It's the same thing in the market. If you're in, like Palantir was, all the way from, I would say 2024 in the 16, 17, I remember it back there. Then it spiked up to the 27-ish area, comes down to 20. This is where it really took off with that fake out move that had on there's a weekly chart. The week of the 2nd of August of 2024, it closes at 24.74, and the next day it opens, gaps down. Must have been earnings news or something over the weekend. It gaps down to 21.23, but it closes up near the 30.36 high, and that was it. So it's gone from the 30s all the way to 125. Peak D in the weekly chart, pulls back, has a pattern that looks like the dreaded H pattern. So what I've been saying is, since this gap down at 125.41 round about the 18th or so of February, it's just been, it couldn't do anything right because it just hasn't been able to hold the same strength to the upside. It keeps fading. So at this point, I'm saying it's still on the outs. But I'm going to be watching it closely because at any point if it goes, it's at 85.64. It usually has big moves. If this starts to trade back again at 102.50, it's back in fashion. Right now, it's just kind of struggling. I'll talk about it when we get back. Dow's down 10, S&P's down 6. Be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back, and I had a question about what tariffs do we have from Canada. So I'm looking here, and it keeps tariff cheat sheet. Here we are. Let me just see if that's the question that I can answer. We have, it just keeps giving me Trump stuff. I don't want that. I just want to know exactly what we're looking at. I can't tell offhand, but I know that there are a lot of tariffs from Canada. We'll see. In the meantime, there is some talk. I think there's in the den. Someone said. Someone said that just in Fletch said Canada says they will remove tariffs if U.S. does too. That's interesting, isn't it? Okay, so I just wanted to finish up with Palantir. So this could be a whole new thing. The pattern that you would be looking for in Palantir for it to get back to being the in stock in that group. This is the technology, diverse data fusion platforms, a lot for the military. Is that you wanted to make a U-shaped pattern that goes to a W with a higher low and a higher high. So that's why I said into the hundreds, all of a sudden it becomes fashionable again. Right now, it's just kind of out. When you're out, you're out. So that's the way I'm looking at it right now. I mean, I mentioned the other day, GD, General Dynamics, very nice move in this rectangle pattern, trying to get back to the 278 area. Peak A, peak B, peak C. So this is doing very nicely. Not all of them are doing that. So, okay, let's get back to what we were looking at before, because there's a lot to go through. TLT. So the TLT had a big spike to the upside. It went over the Chapman wave inside track repellent zone, but it's now gone back into it. So it's going to be very important, just as something that is saying you're off the chart, you're just off the radar right now, and that's the way we want it, is to have yields, at least the TBT, I want it to be not going much higher. So it went to peak C, arched over the dreaded H, came down, took out the left side low, but today it's closing back above it. But if you look at the weekly chart, that's starting to be negative, and it says yields could be coming down. Now, someone in the den mentioned, something about their analysis suggests that inflation should be coming down, at least for a little while longer. regardless of the tariffs. I think that's kind of an interesting way to look at it. Basil, you're laying out my game plan heading into today, but I wanted to see fear first. Need a high trend today to trigger the cascade of all the things I see. Hence, I want to see a fear-inducing dump today. So the day is young. Let's just imagine this is kind of what you see on a low, not the low days. That would be where the VIX index starts to pull back because the market's doing very nicely. It went down from was 280 or 300 down in the Dow to positive. Now it's positive again at 18. So what I would love to see is all of a sudden the VIX index spirals because the market just has one sudden, as everyone's getting comfortable saying, yeah, I think I nailed it. I nailed this. All of a sudden the market takes another dive. And then by the last 45 minutes of the session, and you have one of those Chapman wave 352 days, that's a 352 in the afternoon, Eastern time, the market goes right into the high of the day, into the close. I don't want to get there, other than to say, I agree with you. That would be perfect if we suddenly saw a slide, not to the low, but a slide enough to say, you got this wrong. And then by the end of the day, the market goes higher, the VIX goes lower, and we're off to the races, at least into next week, maybe into Wednesday before something else comes up. That's what I'm looking at. That there's that chance, and I wanted to be ready for it. It's better to be ready for it so that it's not a surprise. I'd rather be saying, I wish I was much heavier into the stock. I might even this afternoon say, you know what, a little nibble here and a little nibble there. Be prepared that it will be taken out, but let's be in position so that now we say we are controlling our destiny rather than the market controlling our destiny. That's the way I like to do it. I don't always do it, certainly in the futures. I don't always do that because there's always experiments that I'm trying to do to learn more. But at the same time, that's the attitude that I have for subscribers to my opening call. I want us to be in the game and to stay in the game just as long as we can. We do not want to be whipped around and saying, that's it, I'm done. I want you to be able to say, we've taken gains when we have had them, really good gains. We've missed some. We've got a couple of losses. They're very small. They quickly made up by gains. That's kind of the way I look at it. Look at the 200-period moving average, the VIX index, where it came right down, hit it, and it bounced up. And look at the way the steadiness of these highs. Look, let's call this the low, and this goes peak A. That'll be peak A, peak B, peak C. I'd always expect a D in the VIX index, but I wouldn't be surprised over the next couple of weeks we actually do get a D over 30 in the VIX index. That would be the one that I'm looking at for the real low. Meantime, it's preparation. As Paul always said, similar to your last comment, better to be out wishing you were in than in wishing you were out. The fabulous expression. I mean, Dave White, wow, we miss him a lot. We miss a lot of people here. I mean, we miss Tom. On those moves to the downside, that's where Tom was just fantastic, Tom O'Brien. He just knew how to just play it right to the bottom. And that's well, what can we say? That's life. And that's what can we say? Notice, it's not always in all. Yeah, that's another thing. I don't think you need to be in. Even if, let's just say there's a gap up tomorrow, I don't think you need to be everything in. I'm putting in 5 brand new positions. Start off with what you think are the ones that would be the most likely to garner follow-through strength on any dips. That's why I'm saying the Dow, the way it's held, look at the way it's held. I don't know if this is going to be the case after this, but look, it hasn't even got close to the 40,661 low of the 13th. This low from 3 days ago is at 41,148. So that just says to me, hey, it's holding better than the others. I don't know if I would jump into, say, the semis, but I would definitely jump into something like the brokers, something, maybe even the healthcare. Some of those healthcare stocks have held really well. I want to see, look at the XLF. This is the financials. Look, it hasn't even arched over properly in the, this is nice. Look how it's holding this is the S&P Select Financial Spider Fund. Look how it's holding the support. But the KRE, is this another time we're going to try the KRE? It's holding quite well. It's above the 200 period moving average, the S&P Regional Bank ETF. I'd rather go with what I think could work to get some profits, and then I can experiment. And that's the way I want to do it right now. I'm not going for. So here's another thing. What about the SLX? This is the select. Yesterday, it's very interesting. I thought we'd get a preparation. So I'll go to the US Steel, not one of the great companies, but one of the great trading companies, because they're always for sale. Something's happening. So what happened is we get in. I said, make it. We want it at under 42, I think 50. We got it in at 42.37 or 42.25. And what does it do? Out of the blue, it has a huge spike to the 44 to 14 area, and then it comes back down. So we raise the stop. We got taken out for a little bit of a loss, and now I'm looking at it and saying, now what? We'll see what happens with US Steel. I'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, so as we wrap up this section, and then of course tomorrow I'm going to be doing my show at 8 o'clock before the market opens, unfortunately. We're looking at the 5 minute, just about to go to a leg D in the E-mini. That'll be a leg C if it goes just 25 cents higher than it was. That'll be leg C. I like what I'm seeing right now. Let's talk about C. But let's just go through this very closely and carefully. Bitcoin is trading up 735 at 86.85. The question then was, where did it go? Are companies looking to it as a safety? Is it going to be the Holy Grail? What are your thoughts? No. I think that Bitcoin is in its own world. Each thing I think you have to look at separately, whether it's the VIX index, whether it's gold, whether it's the dollar. I think each thing is doing its own stuff. Look, the chart of the Bitcoin from the 110,975 the week of the 20th of December started down earlier than many of the other indices, but I think it's still holding pretty well in the monthly chart. I just think it's a different vehicle that's being looked at, and it's being looked at in a completely different way. And all that I will say is that until it starts to trade, and I mean trade into the 92,700s, it must hold that area. That would say you're making a cup formation. Now you can work your way back up. Right now, I just think it's kind of on the sidelines, not breaking down, not breaking. We're still long. So that's the way it is. We're taking a little bit of profit on the way up, but we like it at this point as another vehicle in the market. So summing up, yes, I think people are beginning to think that maybe there's some good news that comes out of it. I'm saying I couldn't care less what the news is. I absolutely care what the market says. And if the market overnight is responding really positive, we might have to chase stocks in the morning. If it just rallies and then fails within the first 3 hours of the day, wow, that's going to be a problem. But I'm liking what I see just in terms of setups. That doesn't mean to say the setup's going to work. I'm saying there's a chance that we could have a pretty decent rally into the close today.